and my fire alarm is off. And my name is Kip Cummings. I am the National Marketing Director, or one of them, with the Manhattan Insurance Group. And I'm also the Worksite Agency Director for Manhattan Life. And I want to welcome everybody. I've got Catherine Blanco with us, who is also going to be on the webinar, and later on we'll be kind of taking over on a couple of the features that we have. But we want to just welcome everybody, and if you will, Catherine is going to mute everybody on the backside, and we're going to stop periodically throughout the presentation. And if you have a question, feel free at that point to jot them down and ask them. Or if you have chat feature availability, go ahead and feel free to just type a message on the chat box on the webinar, and we will stop the webinar at that point and actually address that question, because sometimes while it's right there, we want to go ahead and hit that question. So, Catherine, are you there?
Yes, I am.
Okay, I'm going to go ahead and have you mute everybody, and then we will begin and start with our webinar.
Yep, everybody's muted right now.
Awesome. And I am going to advance and then go to the next screen there. Let's see if I can move us forward. 1 second. There we go. Okay. First of all, for those of you that aren't familiar with the Manhattan Insurance Group, I'm going to give you a little bit of background history so you know who we are and how we got to where we are today. The Manhattan Insurance Group itself started in 1982 and was originally focused on acquisitions. We have Manhattan Life, which was originally founded in 1850, and it was acquired in the year 2000, and they do life, health, and insurance products in the U.S. and Puerto Rico, so our folks down there that are on the call with us understand products that we have, and other denominated life insurance products in Latin America, Asia, and other countries worldwide, and we're spreading further and further in that international market. Century United Life, which is the product and company that we're going to be focusing on today, was founded in 1963, which was one of the best years in our country's history, because that's the year I was also born. And we acquired them in 1995, and they offer a wider range of supplemental health products to individuals in the worksite marketing, but also in the individual market as well, which is one of the features that we have, is the ability to market outside of the payroll deduction. And we do cancer and disability and critical illness products and accidents. And then we also have Family Life, which was founded in 1948, and we acquired them in 2007. Alan Valla actually heads up our life division, and we have life insurance products that provide coverage basically to the blue-collar American class, with especially our Viva Life product, which is our 20-year simplified term plan. And then last but not least, we recently acquired Washington United Life Assurance Company. We call them WULA for short. They were founded also in 1963, and there are a short-term single premium annuity line. And this right here in the middle of the screen, that's our headquarters in Houston, Texas, off of Northwest Freeway. And let me kind of scroll over here. I have a slight delay on my slide presentation, so bear with me as we go through. One of the features of our cancer plan that I'm going to talk about here is the reason why does somebody need a cancer insurance plan when they already have health insurance. And that's one of the big objectives I had to overcome myself. I didn't grow up in the South. I grew up in Los Angeles. And in Los Angeles, nobody ever heard of a cancer policy. Everybody had wonderful major medicals, so there was seemingly little need to have a supplemental plan. And that was until I came to the South, where cancer plans were, you know, as something in the cupboard as a piece of sliced bread. Everybody had one. And it wasn't until I started selling these that I saw the actual need for people to have these. And mainly, the biggest feature of this type of product, whether it's a cancer plan or a heart plan or an accident plan or nearly any other type of ancillary product, it's the fact that every bit of the benefits from these plans reads like a grocery store receipt when they have medical expenses. At the end, all of those benefits and features of the policy are tallied up and given directly to the individual to use however they want. So they're able to actually use that money for any type of need that they have, whether it's paying house notes, car notes, gas, foods, electricity, and it does not conflict with other insurance. So if a person has Blue Cross or they have United Healthcare or Humana, those are our basic major medical plans, and they typically co-insure. So what happens is one waits on the other to pay, and they argue at claim time as to who's going to pay what first. With our plan, we get a copy of the bill, a copy of the EOB, basically a one-sheet claim form. We fax that down to Houston. The claims are processed, and the checks are sent directly to the individual over and above any other insurance they have. Yeah. Okay, and these are just some of the reasons of why a person may actually need cancer insurance according to the American Cancer Society. In the United States, men have about a 1 in 2 lifetime risk of developing cancer. For women, the risk is a little more than 1 in 3. When I first started selling these plans in 1988, those were actually reversed. In fact, women were typically the ones that were concerned about cancer, and men were more concerned with heart disease, heart attacks, and strokes. And the reason that those statistics have changed, especially on the side of men, is men were not being checked for any type of cancer. They were so focused on heart problems that they always went in for their, heart checkups and monitors and things of that nature. The women were always getting their typical checkups, mammograms, and what have you. And now it's projected on that second bullet there that on an annual basis, over 1.6 million new cancer cases will be diagnosed. And advances on cancer treatment continue. More and more people will survive. Major medical plans usually cover only direct medical costs, but non-medical costs can include loss of income, living expenses, transportation, special diets. I was talking recently to one of my own personal clients that used our plan, and he lives just south of Shreveport in a little town called Mansfield, Louisiana. And he had to go to MD Anderson in Houston. We have a claim example we'll show you here. He went once a month for 9 months. His transportation costs alone between hotel, food, and just overall general expenses going down and back were over $3,800 cash that he would have had to come up with out of his own pocket, where he spent the money, sent us the receipts, and then we sent him money back, including his lodging and his transportation. Excuse me. Just some of the benefits in our plan. On radiation and chemotherapy, we pay up to $7,500 per month in radiation and chemotherapy. It's as little as $2,500 a month in actual charges. We have a first occurrence in our plan built in up to $10,000. And then we have cancer screening between $50 and $100. And it shows here that the issue age on the top right is 18 to 69. Those are our current issue ages. However, we can also continue those plans for those folks that have those plans. They're guaranteed to keep that policy for the rest of their life. And down at the bottom left, we've got a couple of riders we're going to talk about, the critical care and intensive care riders. And then the other features built into the policy you'll see are the transportation, lodging, hospital, and other facility coverages. and then also dreaded disease benefits. And I'm going to the next screen here. And speaking of dreaded diseases, if any of you have been attuned to Facebook or any type of social media, especially last year, they were going crazy with the Ice Bucket Challenge. And the Ice Bucket Challenge was because of the devastating effects of amyotrophic lateral sclerosis, which is also called Lou Gehrig's disease. And our plan includes not just ALS, but a list of about 27 total different dreaded diseases. And if you look down here on this list, I have lupus highlighted. If any of you are familiar with lupus, even though ALS is getting a lot of attention, if we took all of our dreaded disease coverages combined, lupus supersedes every one of those as far as the #1 dreaded disease outside of cancer that our cancer policy is paying on. And so we cover those dreaded diseases as if it were cancer, and we're going to go into that in just a little bit. And these are just some of the benefits that the policy has. There are probably 6 or 7 pages of benefits that show what our plan will pay on. We've got the prescription drugs and medicines. These are the in-hospital benefits. Physicians, ambulance, private duty nursing. Extended benefits are built in. Government and charity hospital. A lot of folks use the VA. Close to me, we have Barksdale Air Force Base. We have a lot of retired folks that use the VA. And even if an individual goes to a government or charity hospital and owes nothing on their bill, we'll still pay $200 a day for them with our policy. And then for extended care and hospice care, which is for the terminally ill, we also have benefits for that as well. If you get a chance, I want to encourage you also to get your brochure out and just look at all of those other benefits. And as it states here, there's transportation, surgical benefits, experimental treatment, physical, occupation, speech, blood diagnosis, and all kinds of good stuff there. Those are all the testing benefits that are typically involved in a cancer policy. This next screen, though, is really the one main focus that I want to go into on this webinar. And that is because when I make a personal presentation to a cancer policy, nearly all of the other benefits that are in our brochure I ignore except for this one page, which is it's on the brochure I'm using today, which is in Louisiana. It's on the second page as you open it up. And it shows the 4 plans that we have. Some states rather only have 3, but this shows the 4 plans. This page right here is what sets us apart from all the other carriers, whether it's Allstate, Transamerica, Aflac, Colonial, American General, NTA, UTA, any other carrier that's on the market. Typically, with all the other benefits that our policy has, will pay nearly identical with an exception of a few benefits up and down. At the end of the day, the same benefits. It's this page and this page alone that sets this apart. And one thing that we start off with, you'll see here on Plan A, we have a $50 a year cancer screening benefit. In Montana, it's $100 on Plan A. Plan B used to be the plan that I sold most of the time, which I would typically, it shows a benefit option on the cancer test of $50 or $100. And I would usually show Plan A or Plan B to my typical workers on there, and I would use the $100 on Plan B as my secondary option on there. Plan C has $100 a year, and then Plan D has become my new all-time favorite. And that's because of the second benefit that shows in that benefit package. Every one of the plans, whether it's A through D, has an initial diagnosis or what what we call a first occurrence benefit. It's a rider, but it's built into the policy. So I know right up front if a person has Plan A and they're just diagnosed with an internal cancer, it's not a skin cancer diagnosis, although the plan will pay on skin cancer, that first occurrence benefit is specifically for the first diagnosis of an internal cancer. Even on Plan A, they're going to get at least $100. But if you look all the way over on Plan D, that first diagnosis right up front, we are going to pay that individual or their family member, including children, a benefit. Each person has their own first occurrence benefit, and it's $10,000 right up front. The difference in premium in Plan B and Plan D, I'll show you in just a little bit. It's not much, but the benefit is huge because not everybody diagnosed with cancer obviously goes through radiation and chemotherapy. And not everybody that goes through cancer has a major surgery. I had an individual at my church I sold a cancer policy to, and she had cancer in her big toe, and they did a minor outpatient surgery. It wasn't internal cancer. They did lots of tests to try to confirm that it was only isolated to that toe. Her entire claim ended up being a little less than $3,000. Had I had Plan D, it would have been $13,000 on that exact same claim, if that makes sense. And then the next benefit there are the daily hospital incomes, and those are $100 to $150 a day, and then Plan C, of course, is $300 a day. Most all the other carriers out there, let me reiterate, have some type of cancer screening. Some of them will even have a first occurrence benefit, and nearly all of them will have the daily income and the surgical benefit. But this last benefit on this page right here is where I sell this policy. And if you look here, it shows for radiation and chemotherapy, and I want to actually elaborate a little bit on that. In the actual brochure, it says we'll pay the actual charges for teleradiotherapy, radioactive isotopes, chemotherapy, chemotherapy enhancer drugs, and anti-nausea drugs. Those are all included in that base benefit. And the reason why I want to emphasize the anti-nausea drugs is a lot of carriers, and when I say a lot, I'm talking about most of them in my 27 years of experience selling cancer plans, do not pay the anti-nausea drugs. And it's often the anti-nausea drugs that drive up those costs for radiation and chemotherapy because they allow your body to not only recover but to be able to accept those dosages and to be able to deal with them as your body heals and cures over time so that it can go back and have another one. So if you look on our Plan A, for example, we're going to pay the actual charges up to $5,000 in actual charges per month. Every month, that benefit resets itself and is 100% available at $2,500 per month the next month, and so on and so on. And I mentioned that on the Plan B, which is the plan that I was originally selling the most of, now it pays $5,000 a month, and so does Plan D, which is the plan that I have here. I'm going to pause for 1 second. There's a question that came in from Tanya, and it says the cancer screening benefit can be used yearly to check for cancer even if they have never had cancer, correct? This is preventive benefit. And that is true. And it's payable one time a year per person. And one thing I noticed, Tanya, is what they started doing about 2 or 3 years ago is on 16-year-old girls, even at that young age, they've been coming in and started doing cancer screening and checking for cervical cancer at a very young age. And even though health insurance is paying that cancer screening benefit, we definitely are going to be paying that cancer screening benefit. It's once a calendar year. So if a person has a mammogram in February and then some other type of cancer screening in March, it's only going to pay that one, but then it resets itself per person per year. That's a great question. And so I want to go back to this radiation and chemotherapy benefit section on the bottom part here of this A, B, and C, and D, because this is what I truly believe will set us apart, and we're going to go into this a little bit more in detail as to why you want to sell a cancer policy that has a monthly benefit in radiation and chemotherapy versus the other types of options, and those are typically daily, which a lot of carriers will pay a daily amount maximum. Some of them will pay a weekly amount, and other plans pay an annual amount. And so I've had that question asked to me several times, what is the difference between a monthly benefit amount versus the others? Because if a person has a $500 a day plan, it would seem logical that at the end of the month they would have a $15,000 benefit that they could actually draw from. I'm going to show you exactly how that works and why it makes a difference. Bear with me 1 second. I am scrolling over to the next screen here. Again, I've got a little time delay, so bear with me. Did I skip a page there? Bear with me 1 second. Let me see. Yeah, okay, no, we were right. So we're going to go right to some of our competitive payroll rates. That we've already been through that. And there we are right there. Okay, so down at the bottom, just to kind of give you a quick example of our payroll rates. By the way, on a list bill, that's 3 lives that will actually allow the payroll rates. It doesn't have to be 3 cancer policies. It could be, Tanya, for example, you could sell John a cancer plan, me an accident policy, and Linda a critical illness plan. That constitutes a list bill of 3, and now it immediately goes from individual rates to payroll rates. So let's look at those payroll rates on, let's go straight to Plan B, which is the plan I had been selling. I told you I was originally selling Plan B with a $100 wellness benefit. On an individual, that premium, which includes the dreaded diseases, is $33.55 a month for an individual. For an entire family, it's as low as $53.91. If you jump over to Plan D, which takes basically the same benefits as Plan B, but bumps that first occurrence benefit from a $2,500 to a $10,000, the entire premium on a whole family is $68.42. An individual, as you can see there, is down to $42.20, and that's on payroll rates ages 18 to age 64. If a person, by the way, leaves a payroll deduction, for example, I write the city of Shreveport, when they leave that payroll deduction, which I have employees coming and going all the time, we do a simple change from a list bill over to a bank draft. They keep the same payroll rates when they leave that group as they had before, so it doesn't jump to their direct bill rates on any type of payroll change. These are the optional riders that are towards the back of the brochure, and I sell these optional riders with nearly every single policy. If you look here, the intensive care benefit will pay $600 per day if they go to intensive care, and that is for any reason. In my own personal family, when my mom and dad bought a cancer policy back in 1988, my sister rolled a car over out in the mountains in Southern California and went to intensive care for 2 days, and their cancer policy paid $1,200 for that car wreck, had nothing to do with cancer. If they go to a step-down unit instead of an intensive care unit, the cancer policy for any confinement to a step-down unit will pay $300 a day, and that's for up to 30 days per confinement. So that benefit doesn't go away. It resets itself down and starts all over again once that confinement is over. The critical care benefit rider is another benefit that I put on nearly every policy, especially if a person can actually qualify for the benefit. What they'll do it says here, it says for heart disease, it'll pay up to $2,500, and we have 3 categories that rider will pay for on that $2,500 benefit. The first is a pacemaker insertion. The second is angioplasty, and the third is a heart cath. And so if an individual has a heart cath, has nothing to do with cancer, but they just have a heart cath, their cancer policy with that benefit will pay up to $2,500. If the bill is not $2,500, whatever's left over is still available to them in their pool of money. And then for a heart attack or stroke, their cancer policy on that one benefit will pay up to $5,000 for the heart attack or stroke. Let's just kind of look at that in real terms. My dad had a heart attack back in 1990. He spent 21 days in intensive care. Both of these benefits paid. He had his intensive care benefit paying, and then he had his heart benefit paying as well from his cancer policy. Catherine, I want to go ahead and open this up for some questions for just a minute and see if anybody has any questions. I'm going to turn that over to you for just a minute while we kind of go through some questions that anybody else may have that aren't able to chat.
Absolutely. I have unmuted everyone, so if anybody has any questions, you're more than free to do so. Any questions, anybody? Anybody? No? Nobody? I think we might have lost sound for Kip. Can somebody out there hear me? I think we might have lost connection, but I think it's coming back now.
I can hear you just fine. We've been here.
Okay, perfect. I think Kip might have lost connection too for some reason. So let's give him a few minutes to come back so he can continue talking to us about the product, but feel free to ask any questions. Or if you guys think of any questions later on, you're more than free to ask, like Kip said, either through the chat window, or you can save them for the next time that we open up for questions. Just bear with us one moment here and see what happened with the sound for Kip, because I think we lost him. Just bear with me here. And I thank you all for your patience. I hope that you're all enjoying all this information so far. Oh, we got him back. He's back now.
Okay. Let's try this one more time. Hold on one second.
Okay. And Kip, so far nobody has any questions at this time.
Okay. Bear with me 1 second, and I will get right back with everybody.
Oh, no problem.
And this should. Okay, are we there? Am I back?
Yes, you're back.
Okay. Okay, I think we're back in business. Let me see if that will allow me. That was just crazy. I'm not sure what happened there. Okay, so back to where we were. Century United versus the competition. Let's just talk about one of the benefits that we went over earlier, and that was the dreaded disease rider. This is something that's very easy to skip over, but to me, it's a extreme selling point, especially as these dreaded diseases become more and more evident in our society. Dreaded disease rider typically only pays on daily income. However, with Century United's plan, once a dreaded disease is diagnosed and becomes payable under the policy, the entire policy now and all the benefits with the policy on cancer now become associated with that dreaded disease. And as I put here, if an individual develops lupus, it becomes a lupus policy. If it's ALS, it becomes an ALS policy, and so on and so forth.
Most every other carrier I've seen, number one, you have to pay extra for a dreaded disease. And if you do have dreaded disease coverage, then typically that dreaded disease coverage is only for the daily income itself. None of the other benefits apply. And with ours, again, we're going to take that entire benefit stream that they incur, tally it up like a grocery store receipt, and that's the check at the end of the day. And we talked about on the radiation and chemotherapy, what's the difference between having an actual charged monthly plan versus having one that pays either daily, weekly, or annually. This is a real-life case. I started to give you a little example earlier of one of my clients. He was diagnosed with cancer. He started a monthly regimen down at MD Anderson. The treatment cost itself, in other words, this is not what he paid. This is what was charged to his health insurance. It was $5,700 per treatment. He went once a month for 9 months. His copay on his health insurance through United Healthcare at that time was $100 per treatment. Here we are, real life case versus the other benefit options with our monthly plan. And he actually had Plan B on our cancer policy. So we paid, when he went in for his treatment, he would go in on a Friday. He had his treatment on Saturday. He went home on Sunday. It took him nearly the entire 3 weeks of every month to recover from the high dosage treatment. And when I talk about the other carriers, if you look here, with one plan, I compared this to a $500 a day policy. This is the one that typically most people think, well, at the end of the month, it's $15,000, 30 days times $500 a day. But in actuality, you can handle low dosage treatments, which are typically small doses of radiation, small doses of chemotherapy, and even those smaller plans that pay the daily amount are going to pay very well. In this case, if a treatment is $200 and you have 2 or 3 a week, and you're able to get that type of treatment, that daily benefit plan is going to work. In this individual's case, these are the type of cancers that people go through that cause financial devastation, because in his 9 months that he went through his treatment program, not only did he not work, neither did his wife. And he had to go and take that trip to MD Anderson. His wife went with him. There was additional food and lodging on her behalf and his cost and transportation and gas. So on that 9-month regimen at $500 a day, he would have received a check from a daily paying benefit plan of $4,500 in that exact same scenario. If he had a weekly plan that paid a $2,000 a week, I've seen one that did that, times 9 weeks, which are only the time that he had his treatment, that plan would have paid $18,000. Or compared to the plan that we had actually changed him from about 2 years before, the plan that he had prior to Century United capped out at $10,000 a year. By the time he hit his second treatment, his entire regimen of radiation and chemotherapy would have been used up. And I'm one to tell people that the last thing you want to do on a plan like this is use it. The second last thing you want to do is use one up. But just in a comparison for those that aren't familiar with a cancer plan, when you look at the end of the day, the amount of claims nearly every single time in most every single scenario, Century United is coming out ahead. In this exact scenario, it was a claim difference of $45,000 versus on a daily amount, $4,500. And I put $500 a day, by the way, to be very generous on a daily amount. There are only a couple companies that even offer a $500 a day benefit. And you're going to pay tremendously to even have that higher amount. On those weekly amounts, $18,000 versus $45,000. And on the annual caps, a $10,000 versus $45,000. And really, I tell people, when a person uses one of these plans, all we try to do with Century United is not just make the client happy. All the companies that pay a benefit will make a client happy. Our goal is to make them happier, because that little ER at the end of happy means they got more pictures of Benjamin Franklin in their Get Well card than they got from the other people. And that, in and of itself, will build customer loyalty and keep them coming back and saying, what else do you have that I can qualify for that works just as good as what I already have? And let's go to our rates a little bit more in detail. If you look here, we've got the Plan A on bank draft, and then we've got Plan B, C, and D. But I want you to notice those payroll deduction rates, how much they drop when you can actually take them from a bank draft situation to a payroll deduction situation. If you look on Plan B, under the bank draft rate, so let's just look from age 55 to 64 on the $100 a day plan for an individual, it's $62.25. If you look at the payroll deduction rate, it drops it down tremendously, $33.55. Same with the family rates and all the other rates on these plans. Now, I want you to notice one thing on those rates. It says 18 to 64. If I'm writing an individual, by the way, in the city of Shreveport, and they are 66 years old, it does not mean I cannot sell them a plan under the payroll deduction. It just reverts back to the bank draft rate. So ages 65 through 69 can still be sold a policy on bank draft, on payroll deduction. We simply use the bank draft rate. And then lastly, the critical care benefit riders. If you look, the age bands are for the bank draft rate, and 55 through 64, for example, on the critical care rider for a family is $7.38. If you look at the payroll deduction rate, it drops down to $4.01 a month. When I told you I sell this on nearly every single cancer policy, it's because the benefit that they're going to receive for that low premium can never be repaid once they use it one time for one person, because of the amount of benefit it's going to pay. And then the intensive care rider, same thing. It shows their ages 55 through 64 on a family. Let's say it's 21, 24 if you follow that grid all the way over, and it drops that down to $11.52, so almost a 50% change in premium for the exact same benefit. And again, once they leave that payroll deduction, those benefits and the rates stay with them. A little bit on the underwriting guidelines. I'm going to turn this part of our presentation over to Catherine down in Houston, so she can kind of go over some of these benefits here. And were there any other questions that anybody has before I kind of get myself muted and listen on as well? Catherine, I'm going to turn this back over to you. I don't see any other questions immediately, but I'll be here to answer any that come up.
Okay, perfect. Thank you so much, Kip. Definitely
Absolutely.
very useful information on that product. I'm still learning about this product because it has so many benefits. It just seems like it's not one or two benefits, but several benefits. And I thank you again, Kip, for sharing this with us. And again, I want to thank everyone for joining us today. And now we're going to get down to the administrative side of this product. We're going to talk about some underwriting guidelines. The issue ages for this product, as Kip had already mentioned previously, is 18 through 69 for individuals and 18 through 64 for groups. However, clients that are 65 through 69 can still apply under the group plan, but they will have the bank draft rates. Let's go to the next one here. Unmarried dependent children under the age of 21 may be covered, so they can be covered under the family rates. Must be cancer treatment free for 10 years prior to applying in order to qualify for this product. Regarding the skin cancer, if the client has been diagnosed with or has been treated with skin cancer at any time, they will be considered for cancer coverage. However, the skin cancer will be excluded from coverage for the life of the policy. The effective date of a policy will be the policy date stated on the policy schedule page. It is not the date the application is signed. We do have some confusion with that sometimes. CUL will not, which is Central United Life, will not issue a second indemnity cancer plan to a proposed insured that already has an existing cancer policy with another carrier. But however, they can replace the other policy with our product, and proof of replacement will be required. Okay, Central United, as Kip had mentioned before, pays benefits directly to the insured unless it is assigned to a specific doctor or hospital, whatever the case may be, but the check is made out to the client. Okay. Does anybody have any questions regarding some of these underwriting guidelines so far? Okay, not yet. Okay, just remember that if any of you come up with any questions, you are free to either type them in or you can ask them during our question sessions. You should have the agent's guide by now. If you don't, you may download it from our website in the Agent Resource Center. It is very important to review this as it will come in handy when meeting with clients. This will give you detailed information about the product and the underwriting guidelines. Okay, and here's a sample policy. You can always request one from our office for your review. And even for those clients who prefer to see what the policy looks like before they buy. We do know that there's clients out there that prefer to do that. This is also very helpful, especially for terminology definitions. And for those of you who are not aware, we can build a hyperlink for you for our online application system, which you can download to your computer, iPad, or smartphone. All you need is an internet connection to connect to our website. This actually makes it quick and easy to quote the client and complete the application. This is one of the screens of what it looks like for this product. You can also attach the hyperlink to an email and send the email to your client, who can then get a quote and complete the application at their convenience. In addition, that hyperlink can be embedded into your website if you are driving clients to your website for direct sales. One last point, the hyperlink contains your agent number, so all sales submitted through your hyperlink are automatically credited to you. One of the many benefits of using this system is that you do not need to see the client in person. And the actual signature, the electronic signature, will be the client's mother's maiden name. So if the client's mother's maiden name is Smith, at the end of the application you write Smith, and that will be the actual signature. So this is very convenient. You can actually make a sale on the phone without having to drive or make a trip anywhere. Here's what our paper application looks like. This application can be submitted through regular mail. It can be faxed to our office. You can email it to us. You can also upload it on the Agent Resource Center website. But do keep in mind that for this particular type of application, you must see the client in person and obtain a live signature. In this case, the mother's maiden name will not be accepted as a signature. That is only for electronic applications. Do we have any questions regarding the application so far? For those of you who have not registered yet on our website, I encourage you to do so. This is our Agent Resource Center. There's a lot of excellent tools on here. You can see on this screen, you can download marketing material, and that will include brochures, applications, the agent guide that I referred to earlier. You can download it for the specific state, and you can even view other products that are available in every state. You can view any applications you have submitted, whether they're still in process or they have already been placed in force, and you can also view your commission statements. We have actually just added under our Agent Tools tab, we have added our training library, which includes this particular PowerPoint presentation, so you can view it at your leisure. We also have other products and other handy tools, so if you're not registered yet, it will only take a few minutes. It's very easy to do so. All you have to do is go to www.manhattanlife.com. And we have reached the end of our presentation. We do thank you all for joining us and for your time. If any of you have any questions, feel free to ask, or you can call our office. And again, I thank you all for your time. And again, thank you, Kip, for this very valuable information you have shared with us. And I do wish you all a great day.